So today we have looked into the insurance market into deep, and now we want to have a look into the financial sector. And we are covering the topic factoring and receivables finance as a growth driver for companies. And we'll have a global look at future markets and especially risk mitigation strategies. So factoring and receivables finance are characterized by the fact that a significant financial instrument is made available to the economy. So therefore, in this panel, we will shed light on the current situation in the industry and provide an outlook on technological future requirements. So I'm so happy to have my panelists here, and I'd like them to introduce themselves. And, Neil.
Robert, hey, good afternoon. Listen, thank you very much to you and to SCHUMANN for hosting this session. I apologize for not being there in person this week, as I'm actually in the USA on holiday this week. So it's great to see you, though, and you and both John. My morning, your afternoon. For everyone, I'm Neil Harm. I'm the Secretary General of FCI that's based in the Netherlands. FCI, for those of you that are not familiar with the association, it's a 6 decades old institution that is a network of financial institutions that conduct cross-border open account finance, which is factoring, supply chain finance, asset-based lending. Our membership includes more than 400 financial institutions in more than 90 countries. And our EduFactoring platform allows these members to communicate with each other and conduct financing for their clients cross-border. So thank you for having me this afternoon.
So thank you very much that you're attending while you're on holiday, and great support. And great support from John Beanie as well, sitting next to me.
Thank you, Rob, and really appreciate coming to this historic city and you arranging this really important event. So I think Richard really well articulated the changes that have gone on in the world and how businesses want to do business anywhere in the world with businesses that they know, but also they don't know. Now, that's a challenge that HSBC is here to solve, and that's my role. If they want to do business on open account, there will be risks, there will be liquidity requirements, so we have to solve for that. And part of my role is to reach out to technology providers and partner with them so we give the appropriate solutions. And of course, a key partner is insurance. So it's a very important part of my role.
Yeah, very good. So thank you for your introduction here. And maybe we could immediately jump into how the global situation and overview is the status and the recent developments of the global factoring. And today we have the opportunity to see that from the FCI view on the global level, and then looking into that from your business perspective, and to balance that, what we want to cover here. So if you like, you could kick off, Neil.
Happy to. From a global perspective, FCI is in a very unique position, similar to HSBC with the span of the world that they touch. But for FCI, looking across 90 countries, we have that opportunity to speak with financial institutions and business partners in those markets that are on the ground to hear what's going on. The global factoring environment continues to be very strong, very robust. We had a slower growth year in 2023 compared to the prior few years as we were coming out of COVID. However, when you compare that 3%, 3.5% growth rate globally for factoring to global trade for products, and for the most part, factoring receivable finance is more around products than it is service, that actually declined year over year in 2023. So the fact that the factoring market continued to grow at 3%, 3.5% last year, while the trade market came back a little bit, is very impressive. Reason for that is that factoring continues to grow in emerging markets where receivable finance is still behind other forms of trade finance and working capital finance. We're seeing these opportunities to come into markets, especially in India, the Middle East, Africa, spend time with the regulators, spend times with the banks in those markets, spend time with the fintechs in those markets to really have an opportunity to explain to them the value of financing against open account. It's such a great growth driver for economies when they put the proper infrastructure in place to support that type of lending to their clients from the financial institutions. The other thing that we're seeing, and I'm seeing on a very personal level, is the involvement of the development banks in different parts of the world. FCI has started to work very close with EBRD out of the UK, supporting European development and the fringe markets to that. IFC out of the US that has a very broad reach globally into emerging markets, and then African Exim Bank, Asian Development Bank, Inter-America Development Bank. These are our partners that we're really building up with and seeing some real focus on the development of trade finance as they're starting to really understand the value of open account finance for trade and for local economies.
So thank you for this insight and the highlights that you gave. John, from your perspective, global activity where you are, so what are important factors, risks, opportunities influencing the business?
Yeah, I mean, the first thing is customers are really interested in working capital optimization. So whether small businesses or big businesses, they're very interested in that. Our ability to solve for that, collaborate, solve across their whole working capital, very important. I'd say that we worked with Neil and did some independent review and with a leading consultancy. And they say, look, there is the opportunity for us. We can solve some of the frictions. There is the demand. So the future looks good on that basis. The other thing that customers are talking to us about is sustainability. The whole ESG agenda. They've made commitments to decarbonize, and they need our help to inject liquidity and risk management into that. We're working with some venture capitalists because as the decarbonization comes along, there will be innovations. When those innovations come to market, they need access to liquidity and risk management. Big opportunity. Equally, we're finding need for longer tenor receivables, again linked to decarbonization. And then the other issue is the whole resilience. And again, Richard referred to it. Resilience, very, very important. Give you an example. The Red Sea. The events in the Red Sea have probably added 10 days to people's working capital requirements. So, got to find solutions, work with them on that. The other thing that's happening, of course, is some degree of reshoring or friendshoring, and that's creating the need for our services in markets, Vietnam, Mexico. You've also heard from the economists this morning how strong the growth has been within Asia, so intra-Asian trade. And the final thing I'd highlight is point-of-sale finance, or sometimes people call it buy now, pay later, but point-of-sale finance, where customers want to reach smaller businesses and they want to reach them directly. And that creates a need for us to assess the creditworthiness of smaller businesses and do so very quickly, but also, as is a risk of a marketplace, keep the bad actors out.
So on the threat side, what would you highlight here?
We've got to be constantly vigilant in buyer credit to differentiate good and bad. When we come to talk about technology, I'm really hopeful that we can use technology to assess the creditworthiness using multiple data sources, not just the traditional ones. And as I've indicated, there is the degree of risk with marketplaces where people will impersonate. So we need protections against that.
Yeah. So Neil, protection, risk side of all of that. If you would navigate a little bit, what are the operational risks that you see what factoring companies struggle with?
think the first one I'll highlight, and John touched on this from a risk perspective, is the need in many countries and in many regions around the world to recognize the accounts receivable as a investable asset. And to do that, first and foremost, you have to protect the financial institution around the security of that invoice, so that we know that that invoice is financed and owned by HSBC if they're doing that financing. And there needs to be a regional or country certification so that the other banks, the other financial institutions in that market know that that transaction has been financed by HSBC. I think that is probably the number one thing that can be done globally in different countries, where we've seen it implemented successfully, such as in Turkey, such as in Chile. You see that level of fraud reduced exponentially because there is the reduction of the duplication of finance around that transaction. So for me, that is one of the most important pillars that I'm focused on within FCI as we go into these markets, is educating the regulators, educating the financial institutions on the importance of that receivable, and creating a platform or a system that allows us to then track that asset, so we know who owns the asset, who's financing that asset, and reducing the risk of duplicate financing on that one asset. So that's a very important piece for me. From a sustainability perspective, the opportunity that we have is to get closer to the supplier from a financing perspective. Over the last decade or so, I've seen where financing into a market is in many cases coming from a foreign bank or from a foreign market. And there's an opportunity to bring that financing closer to the supplier. And so that's one thing that FCI does with what we call our four-corner model, where you have a seller in one country, a buyer in another country, and a seller bank in that same country as the seller, and a buyer bank in the same country as that buyer. That brings the financing closer to the supplier, and it allows them to get the other financial services, that they need around that. The final comment, around digitization and where that's heading, and also the access to capital for smaller players. We're seeing marketplaces and fintechs pop up in the markets of Southern Africa and India and South America. And what they're bringing to the table is really exciting, because they're bringing some of those smaller financial institutions into the market to bring liquidity into the SMEs that are in that market. Then many, many times, unfortunately, larger financial institutions struggle to get that deep into the supply chain down into the SME. So some exciting things that are happening there. We're very engaged with those. We're also working with larger banks like HSBC to help get them into some of those markets that, even with the presence that they have, there's still some parts of the world, that they need some assistance getting into.
Yeah. John, the role of digital credit risk mitigation in this respect, how do you see that?
Oh, it's huge. We've got $54 billion of limits outstanding. We work with 9 different insurers. We're operating over 30 countries. You imagine the complexity of that, but also the opportunity that it creates. Customers' expectations are for credit appetite and speed of decision, but they also need to be informed and understand when we say no. Credit insurance and credit management is not just about the initial limit decision, it's about that ongoing monitoring and the management of it, and those tough decisions that you make. Really, really important. In my career, 7 days was, a really good credit response time. No longer. When you've got $100 million outstanding on a single exposure, you've got to be absolutely on top of your compliance. There's no room for error there.
So, what do you see regarding the digital processes? Maybe we could elaborate that a little bit. Maybe if you could describe that a little bit, what are the opportunities to set something up like this?
It's worth saying you've got to find the right partner. We realise that we can't solve everything ourselves. So we have a very rigorous process of going out and finding a partner. And you're looking for their competence, their history, but also the technology platform that will align with our future vision. So that's, that's really important.
Neil, you just wanted to have a cup. You could sip if you like. However, looking into everything that's on the technological side, supporting digital processes, what do you see from the FCI side and how to support that?
From an AI perspective, from a personal level, I've got to say I was a little skeptical, as AI started to come out and chat GPT. But just in day-to-day business, we're seeing the advancement of it. We've implemented a note-taking software, AI software, that's absolutely amazing for note-taking on meetings. I have completely scripted and taken notes from a meeting within minutes after we complete that meeting. And that's just a very simple example of how AI can be used in a very positive method. For me, expanding on what John was saying from a credit perspective, and especially as you work with insurance providers, with which many of our import factors and even export factors do, the collection and dunning process is a critical piece for any institution, any financial institution, to get paid back on their outstandings. And to be able to leverage AI in that collection and dunning process is significant, right? Because the history that you see, to John's example, the $100 million credit, when you start seeing something go a little sideways in that collection process, AI is going to find that much faster across a large portfolio than any single person or a large group of people could ever do. So that is something that we are working with our financial institutions. We're working with our technology partners, with partners like yourself, to improve that for our clients, for the financial institutions. Finally, I think the opportunity, as John was alluding to, is credit. A lot of what AI is built on today is much more historical, not as much real time. We need to figure out how we can bring that AI into a more real-time decision making, and that's going to require data. How can we get better credit data, payment data into those tools so that we can get better, quicker, smarter decisions from a credit perspective?
Yeah, right. I think the AI topic, we'll have a closer look into that.
Yeah.
But I think it's from our perspective, what we are achieving, setting up digital processes, handling credit insurance piece. For risk mitigation purposes, etc. What are the critical things setting up such processes to be effective?
Yeah, I mean, let's think about, in credit insurance, as was illustrated earlier, the majority of insurance claims are paid on time and completely. But behind that, there's a lot of detail to get right. And getting the basics of, is the buyer the insured party? Have you told the insurer when you're late? Those things happen time and time and time again. And a digital process to get that right, to strip out the operational costs, strip out the operational risk, obvious, absolutely obvious. And so you're releasing time for the conversations with the insurer, for the conversation with the broker, to deal with some of the more complex issues. Another thing I'd highlight is getting the documentation right. This morning we talked about capital relief policies. Those are complex. They're different from an ordinary client, yeah? And I can just express to you my current frustration at how long it takes to get that right. Large language models got to be the future.
Yeah, right. So therefore, I think what we've learned today is the balance, risk mitigation using credit insurance and to handle credit risk management on the one hand. On the other side, to set up processes properly, so to ensure that the credit insurance can be effective in that way. And the other thing is to steer the resources, so the people, the competencies of the people to the right critical points and get rid of all the routine work in the end. But it's a complex situation.
Correct.
Anyway, Another thing is where's the market going in terms of game changing? So what are the game changing technologies in that respect? Neil, you touched AI, but what do you see from your experience, John? Where are you in terms of that game changing technology?
Well, let me start with being the fourth person to talk about APIs, because they're real innovation and they're happening now. But as was illustrated, not all insurers can work with us through APIs. So there's both an opportunity and challenge. Something that hasn't been mentioned but is real important to us is open banking. And that offers some real interesting opportunities. We're really interested in the allocation of money. We're really interested in where the money comes from. Here's something that could improve the efficiency, improve the reliability. So that's huge. Obviously, data crunching. Data crunching for business decisions, making better decisions, but also for regulatory purposes. But the bar on the regulatory is very high. So you need to have really rigorous analysis of data, and you probably need to incorporate data which is not currently structured. So here's a possibility. And then I'll throw out a challenge to the insurance industry. We use insurance for all the reasons that were mentioned this morning, but crucially to give appetite on buyers who are not customers. And insurers are very good at working with us, but particularly in Asia, there are what I regard as good customers, good buyers, but they don't have financial statements. They don't have audited accounts. So can we use the data to help us make good decisions? Richard said it's data. So I don't want to risk accept. I want to make an informed decision, but I want to use a broader range of data.
Yeah. So looking into the global factoring world, Neil, how to get data? So what challenges do you see? Because, data is crucial. It's the petrol in the engine.
Yes.
So without that, we are lacking of the crucial impact here to get things right.
I agree with data is the most important thing that we have and need from a factoring perspective, and definitely from the insurance perspective. And again, the majority of our factoring members, our financial institution members, heavily rely on insurance, and that sharing of data between those financial institutions and the insurance industry is very important, even within financial institutions. And I think that's one of our biggest challenges, and probably one of my biggest surprises as I've come into this role this year, is the challenge of sharing data because of data privacy rules, which are important. I completely understand the importance of that, but it is creating a challenge and a bump in the road, if you will, for many financial institutions. I was on a call just last week between a few of the Japanese members that we have and some of our European members that we have, and just discussing what can and can't be shared between them regarding a seller and the buyer and the transactional history that they've had between them. So, I think there's some work that needs to be done around data sharing, some consistency with it. What is private data? What is not private data? What can be shared? How can it be masked if needed so it can be shared in a way? I think that's very important. And it goes back to my comment earlier about more real-time decisioning, right? If we have that access to data that we can share, it's going to help everybody. It's going to improve the trade flows and the trade finance that goes along with it.
Yeah, so I just want to take that spontaneously here. Real-time decision.
Yes.
Is that really important for growing the business, the real-time decision? What is the importance of that aspect to be fast and, secure? In this
Yes,
instance?
it is important. It's not all businesses need an instant decision, but particularly when you're getting into more point-of-sale finance, the experience that we're used to. We go in, we find a product, we put it in the cart, and we expect a decision at the end. Mm-hmm. So that's creating the need for that. But not all decisions need to be so rapid. Mm-hmm. But there is a balance, and I see an increasing need for speed. But also, I need to have understanding of why yes, why no. Yeah?
Right.
Can I also just pick up one other point?
Sure.
It relates again, something that Richard talked about, is regulation. Now, there's some positives about regulation. In India, as part of the country's digitalisation, there is now electronic records of goods being delivered, transport. Yeah? Now, can you imagine how important that is for us in receivables finance supporting SMEs? Because it gives us the ability to be sure goods have moved. And you know, that's evidence to support our financing. We're not relying upon people's financial statements. There's evidence of debt.
So that's an important bridge here, I think. We touched the AI thing already a little bit. Of course, I would like to ask you, what do you see? What are the opportunities in that field? But maybe what are the fields you would recognize for AI? Is that customer services? Is that more in the field of credit risk analysis? In which fields would you navigate a little bit where applications could be promising?
There are many. But I think you put your finger on the initial decision as to what is a good, suitable seller, the terms. There's huge data sets. There's a lot of judgment that goes into that. Obviously, the data has informed the judgment. But I think there's a lot of scope to better analyse that data, to refine the questions, to streamline, therefore make better decisions quicker. So that's really important. On the buyer credit, we've already talked about. Neil's already referred to the dunning area. Now, there's an opportunity where buyers pay in patterns. At the moment, dunning is very vanilla. We have 30, 60-day, 90-day reminders. With data analysis, you can refine the message. You can be more efficient. You can be more effective. And you can take away a source of irritation. Can you imagine how irritating it is to have a dunning letter arriving saying you're 30 days overdue, when in terms of your buyer terms of payment, you're not overdue?
Yeah. So let's have a look whether we have some questions coming in. The first question that I got here is, I read that loud. So from your point of view, what framework conditions for the implementation of AI solutions need to be ensured so that the factoring industry use AI as an optional investment in the future? Neil, would you like to answer that?
Happy to. From an AI perspective, as John said before, there's so many different applications for it. From a credit decisioning perspective, it comes down to data. How can we manage this data better? How can we share this data better and have access to it? If you know the payment terms, if you know the shipping and the billing information that goes along with it, you match it to the payment that has or has not come in. That is something that AI can perform for you, that you don't need a person looking at spreadsheets, to try and figure that out. But there are also some other more basic applications, I think, from an AI perspective in factoring as it relates to just legal applications and understanding the documents that go with that, looking at the rules and the regulations in a transaction. I've been amazed at how I can take a document, put it into a ChatGPT, ask it a question relative to the terms of an invoice and when this is due, along with the bill of lading and the shipping terms, and it comes back with a very crystal clear answer as to what is supported and what is not supported in that transaction. So, I really challenge everybody to look at AI from a data perspective first and foremost, but then think about it broader across just the general business application to run your business.
Let me add the importance of governance. We have got a big job to do to educate people about this technology, and in particular, where does the AI's decision come from? What's the source? Are we sure that it's not biased? Are we sure that this probability engine has not taken a very obscure, improbable event and given that as the answer. So we have a responsibility to understand the technology and put proper governance. And I'm hoping that the industry association, FCI, and others will help us in that education process, because we're all on a journey to learn and see the opportunities, but also respect the risks that come with it.
Yeah.
Great.
So let's take the next question. So how important is customer service when implementing technological solutions to scale the business volume? Will we need more or fewer customer service staff in the future? What do you think?
I mean, at the end of the day, the customer is absolutely vital. Without the customers, we're nothing. So customer service is a given. How do you do that efficiently and effectively? So this technology has the scope to help us get things right first time, to be efficient, be fast, and therefore reduce the need for people to query and ask things. People can self-serve. That's what they want to do with this technology. But we've also got to keep experts available, because not all the answers can be provided. Not everything can self-serve. So that's one thing to bear in mind. The other thing to bear in mind is the need for us as individuals to keep learning. Because I know that there's concerns about, well, will I have a job in the future? Now, I've got huge demands for people to help in this digital transformation. There are not enough people. So if you can change your skills, you can relearn, there's plenty of opportunities.
Yeah. So Neil, how do you see that from a global perspective? So customer service, I'm thinking about customer service in various world regions, different developments in terms of factoring, etc. How do you see that, and maybe differentiate a little bit the personal stuff, providing services, balancing with digital processes?
I think it really expands on John's answer, which I wrote this down as he was speaking. It's that higher value add role. When I can take one of my employees and direct them to more of a higher value add for my staff or my client, that's a huge win. So where I need to leverage AI is to allow it to do the more mundane tasks, if you will, the more repetitive tasks, the data scouring and searching tasks, so that that person no longer has to do that, and they can bring higher value back to the client. And I go back to the example of the simple AI note taking. The fact that we can have AI take notes for us and come back with just very impressive results of a summary of a meeting, where a person does not need to do that. I can now take that person that would have spent an hour or 2 hours taking notes and formatting it for me. That person now can do something that's a higher value add for the company, for me, where I can now read my notes directly back from AI. So to me, it's about redistributing the team and the staff to more higher value add results for the customer.
So I'm just checking what's coming in. The next question here is, what are the critical points in setting up a project and leading a project for digital processes?
Yeah.
What are your experiences?
One thing to do is, before you digitalize, you've got to look at your process, and you've got to rethink your process. Don't deploy your IT before you've rethought it, and really challenge yourself. Bring a combination of true experts, people who've been in the weeds, but also somebody from outside, and people with real skills in re-engineering. That's what I would say.
Yeah. Neil, what's your experiences in that term? What would you expect? What are the critical success factors setting up anything that's in the space of digital processing?
I think similar to John's point, I think you really need to start with a blank whiteboard on that process. Don't try to take that process and just make it digital. You really need to take a step back and understand what digital can bring to you and then build the process around that. I've seen too many cases in past roles and places that I've been where we've simply taken a 10-step process, we take step number 3 and we digitize that and just insert it into the 10-step process. Whereas if we had taken a step back and done it right, we would have reduced it to 3 steps in the process, with 2 of those being digital and 1 being manual. So you really need to start with the whiteboard before you start that process flow.
Yeah, I think we made the same experience. So, and well, I would like to extend that idea. How important is to have the backing for such developments and projects from the board of a bank and the decision makers.
Yeah. Obviously, it's an investment decision. So, you've got to make a business decision. Therefore, you need a business case. And you start with the customer requirements. But you've also not just to ask the customers about what they want now and what they think they want, but you've got to look more widely about broader changes. And then you make a business case. And in an organisation like ours, there's lots of challenge, there's lots of other opportunities, and you've got to be sensible about these business cases. And we heard earlier about the importance of rigour, and then about having the right people, diversity of thinking, diversity of experience. Make sure that that's in. And then perhaps the final thing is what we call an MVP. So don't solve for everything all at once. You've got an idea, develop it to a certain stage, test it, get that feedback, refine it, go again.
Right. How do you see that, Neil, from your perspective?
Yeah, the same, and I go back to that same example of the whiteboard. I think it's very important to understand what the goal is of that process ultimately, and don't try to simply take those 10 steps and turn it into 10 digital steps. It's really a matter of understanding what the ultimate outcome is around that process and starting from the very beginning as you build it out. I think to John's point, a critical factor as you go through it, let's go back to the data. Know where that data comes from. Know where the source of that information comes from. That's a critical part of being able to build out that process properly.
So, John and Neil, thank you very much for the insights. Thank you very much for the exchange of thoughts.